Hi, this is Dr. Kandasamy from Department of BCom Bank Management. Now we are going to discuss about the technology in banking. Before going to discuss about the technology in banking, we need to know the historical development of banking. In 1770s and between the 1932, Bank of Hindustan was functioning. The General Bank of India 1786 to 1791 was functioning. Bank of Calcutta, the first joint stock banks between 1806 to 1809. 1809, the Bank of Calcutta was changed to Bank of Bengal. Then Bank of Bombay 1840 we launched, and Bank of Madras in the year 1843 we established. After that, all these banks once we called as the presidential banks. Banks of Calcutta, Bank of Bombay and Bank of Madras we called as presidential bank. Then this bank converted into Imperial Bank of India on 27th January 1921. The Imperial Banks of India mainly focused on the urban sector. It is completely neglected the rural sector. To eradicate and overcome this issue, the State Bank of India was formed on 1st July 1955. By the act was passed in the parliament, taken over by the government. Introduction, different approaches in banking computations. There are various approaches for automation of banking activities. It is we called as a historical perspective, phase 1, phase 2 and phase 3. Technology adoption in banks. RBI initiative many technologies in banking sector. First one, WAN, W-A-N. That is, the banks often use telecom carriers to provide the network management for their WANs. Most telecoms carriers offer an option that includes the router for termination of MPLS circuits, internet access circuits, etc. Banks use this option because of its most economical approach to magnifying their WAN. In most cases, these tools simply isn't synthesized enough to allow for deep and inspection for traffic patterns. The next one, LAN. LAN is a small and single-site network. LAN is a small and single-site network. LAN connects the network devices over a relatively short distance. Then third one, wireless LAN or WAN, is a wireless local area network, uses radio waves as its a carrier. And the last link with the user is wireless to give network connection to all users in surrounding areas. Then third one, VSAT. As opposed to terrestrial link, satellite connectivity involves uses a transparent space on the satellite and communication equipment called very small aperture terminal, that is called VSAT. Banking technology products and services in e-banking in India. In India since 1977, when the ICICI Bank was first offered internet banking. Today, most new generation banks offer the same to their customer. In fact, all the major banks provides e-banking services to their customers. Popular services under e-banking in India. ATM, that is automatic teller machine. Telephone banking, we all know very well telephone banking. Often we are using telephone banking. It is a most useful and convenient one for nowadays. Then electronic clearing cards. Then smart cards, EFT, electronic funds transfer system, ECS, electronic clearing service, mobile banking, internet banking, telebanking, doorstep banking. These are the tools which produced or used by the bank. Internet banking versus traditional banking. Initially we discussed or we stated some of the points related to the traditional banking, how the bank was introduced and how the bank was formed. And we stated that the technology introduced by the RBI, so we need to explain and the difference or the relations between the internet banking and traditional banking. Number one, convenience. The internet banking offers 24/7. That is, there is no time bar. We can use it the mobile. You can use the phone through the mobile. That is internet banking. It's the most convenience one. But previously in a traditional banking system, we need to allot some of the time. That is 1 or 2 or 5 years. Some of the days take 1 day or half day time. So the convenience is the main thing. By the traditional banking. Cost effectiveness, we all know very well about the cost effectiveness. What is cost effectiveness? The cost, we can take it as a consideration for the expenses that involves a huge amount for the concern in addition to the burden of the concern. Then security, most security is given, but previously in a traditional banking there is some of the cases occur when we are moved to the bank and withdraw the amount from the bank. It is difficult to keep the money or with us to the office or to the home. But nowadays security is a main thing. The third one, accessibility. Accessibility is a quick one. We don't need any delay or the things which we concentrate more. But accessibility is the convenient one. Then mobile banking on the go. That are also called as convenience, payment option, location service, security. ATMs, the cornerstone of the cash access, the cornerstone of the cash access. In 1960, early prototypes, the first ATMs was developed in 1960, paving the way for automated banking transaction. These early models were primarily used for cash withdrawals. Then the second stage, 1970s, widespread adoption. The 1970s saw the widespread adoption of ATM across the various countries, enabling customers to access cash outside of transaction banking hours. In 1980s, advanced functionality. The 1980s witnessed ATMs evolving with enhanced functionality, including balance entry, transfers and bill payments, expanding their capabilities. At present, digital transformation. Nowadays, we are using digital, the word digital. Modern ATMs are integrated with the digital technology, offering contactless payments, mobile banking, integration and enhanced security feature. Electronic fund transfer. The thing which is very important and very often we are using electronic fund transfer, EFT, we also call this EFT system. Initiation. The EFT process begins with the payer initiates of a transaction providing the required information for the transfer. Authorization. The payer's bank verify the transactions, deals and checks the funds availability before authoring the transfer. Processing. The transaction is processed through the EFT network, ensuring secure and efficient transfer of funds between the accounts. Then settlement. Once the process and funds are credited to the recipient's account, completing the EFT transaction. Core banking system. That second popularly we called we used core banking system. Centralized database. Core banking system, the system which we have used centralized banking system. That is centralized database. CBS utilized a central database for managing all banking operation, ensuring the data consistency and real-time updates. Integrated platform. It is integrated all the banking sectors parts. CBS integrates various banking functionalities into a single platform, streamlining operations and enhancing efficiency. The third one, customer relationship management. CBS incorporate customer relationship management tools for the managing customers interaction, improving customer satisfaction and fostering long-term relation. Then global network. Shift the Society for Worldwide Internet Bank Financial Telecommunication, the secure messages network for financial institutions, facilitate international transaction. Standardized message ensures efficient and secure communication for cross-border payments and settlement. Cross-border payments. What is cross-border payments? Country to country. When we are paying the money from one country to another country, it is called as a cross-border payments. Comparatively, we prepared a chart for the student code. Okay, payment gateways. The payment gateways we segregated three. One is RTGS, other one is NEFT, then IMPS. Okay, comparatively we prepared. I explain one by one. Base meaning. What is the meaning of RTGS? RTGS is nothing but as a real-time gross settlement. In the hand of NEFT, NEFT, National Electronic Fund Transfer. Then what is IMPS? Immediate payment services. When it was launched, RTGS launched 2004 and NEFT launched 2005 and IMPS launched 2010. Operator. Who is operator for all these services? Reserve Bank of India is operator for RTGS and Reserve Bank of India for NEFT, National Payment Corporation of India, IMPS. Timing. What is the timing of these services we can opt or we can use? 9 a.m. to 4:30 a.m. all the working days we can use RTGS. That is a real-time gross settlement between the 9 a.m. to 4:30 p.m. for all the working days. But NEFT 8 a.m. to 7 p.m. morning 8 a.m. to evening 7 p.m. we can use the two in the working day. Okay, but IMPS 24/7 all the 365 days. Anywhere, anytime we can use IMPS. Minimum limit. RTGS 2 lakhs is a minimum amount. Then but NEFT rupees 1 is enough. Rupee 1 is IMPS. Then maximum limit, no limit. RTGS, there is no limit to transfer the funds from one account to another account. The minimum is 2 lakh and maximum is no limit. In the NEFT, minimum 1 rupee, maximum no limit. Then IMPS, minimum 1 rupee, maximum 2 lakhs. What is the generally used for? What is it generally used for? எதுக்காக இது யூஸ் ஆகுது? The large value transactions, remittance business payments and remittance bill payment. When the payment is large, we can use RTGS, large value transaction. NEFT, remittance business payments and remittance bill payment. Time taken to transfer of funds, immediate. 30 minutes to 2 hours, instantly. We can use instantly IMPS. Availability, online and offline. That is online. What is online or offline? Means we can use it in the mobile phone at the home, or we can move to the bank. We enter into the bank with the help of the bank staff. We can get this services. That is called online and offline. Okay. Then online, offline, NEFT. Online only IMPS. We can use online. Okay. Highlights. Instant payments of bigger amount. In case of small amount, we can use Google Pay like that. But RTGS, instead the payment of bigger amount, large amount, at the time we can transfer the funds that being that to no limit. The minimum balance, minimum amount is 2 lakhs. Then what is that? Okay. Then availability online, offline, highlights on the instant bank payment, transfer through the branch possible, then scheduled payment not possible. Okay. Benefits of electronic banking. What are the benefits of electronic banking? The first one, convenience. We discussed about the point convenience. The convenience is the thing which we used. Okay. Then speed. We can transfer the transaction proceed quickly and effectively. Reducing waiting time and delay. We no need to wait for anything for anybody. Then security. Robust security measures is placed to protect the customer's data and final transactions. Challenges of electronic banking. Nowadays, in any circumstances or any technology, once we introduced, we need to face some challenges also. Okay, that is the same challenges of electronic banking. One is cyber security. Protecting against the fraud and the cyber attacks is crucial for safeguarding customer data and funds. Digital diving. Not anyone has access to internet or technology, creating a gap in the financial inclusion. Regulation. Evaluation, regulation to ensure the security, privacy and transparency in e-banking transactions. Future electronic banking. Blockchain technology, artificial intelligence, mobile first banking. What are that? Blockchain technology. Decentralized ledger for secure and transparent transaction, enhancing efficiency and trust. Artificial intelligence, AI powered chatbots for customer services, personalized recommendation and fraud detection. Mobile first banking, mobile apps providing a comprehensive suite for banking services accessible anytime and anywhere. Impact on future banking. The technology bank's impact. What is that? FinTech integration. FinTech means financial technology. FinTech means financial technology. FinTech integration. Bank will increasingly collaborate with the FinTech companies to access the innovative solution, creating new products and services. Open bank. Open banking standards will allow customer to share their financial data with third-party apps, creating a more competitive ecosystem. Blockchain and cryptocurrencies. Blockchain technology offers secure and transparent transaction with the potential to transform the way of banks operate. Role of technology banking in modern banking. Enhanced customer experience. Modern technology like mobile banking apps, online portals and AI-powered chatbots offers a seamless and convenient banking experience. Customer can access their accounts, perform transaction and review personalized services anytime and anywhere. Then improved efficiency and automation. Automated processes like AI-driven credit scoring, fraud detection system and robo-advisors significantly enhance operational efficiency. This technology reduces human intervention and errors, leading to faster processing time and lower cost. Then cyber laws and their implications. Information Technology Act 2002. The Information Technology Act 2000 IT Act serves as a primary legal framework for regulating cyber crime and data protecting in India. Legal framework. The IT Impact provides a comprehensive framework for addressing cybersecurity concern in the banking sector. Finally, salient provisions. Key provision for the IT Act relevant to the banking, including data protection, regulation for sensitive personal information, then provision for electronic records and digital signature, and penalties for cybercrime. Regulation guidelines, that is Prevention of Money Laundering Act, that is PMLA 2002, Payments and Settlement System Act 2007, RBI guidelines. These are all the regulations and guidelines. Future technology. Thank you.